So Qiao, this is a new fund for Munro. Can you tell us about it?
Sure. It's going to be a growth fund. That's what we do at Munro. And the only difference between this and the main fund is we will be looking exclusively for companies with market cap less than 30 billion USD. And honestly, it's a long time coming for Munro to launch a SMID fund. If you think about us being growth investors and a journey of a company on the path of growth, we're just looking at the earlier stage of growth. And there are a few really exciting things that come out of it. The first is a lot of these companies have always been on our radar. We look at growth companies, we have 20 areas of interest. And while we're doing work on these larger companies, we're always looking at their smaller competitors, either as channel checks or as potential competitors or potential acquired targets. So we're always talking to them. The network is already there. The expertise is there. The passion is there. I still remember when we officially announced that we are open for ideas for SMID. Every single person on the Munro investment team come to me, contribute ideas, and a lot of them say, well, I have this idea I've always loved. And finally, there's a venue to really express my interest and conviction in this particular company. So I think it's just a really great fit with our interest, with our expertise, with our network, and also the existing Munro growth investing process.
So 2022 was a tough year for equities. However, this year the Nasdaq is up 34% and growth has performed strongly this year. The Russell 2000 has had a flat year. Can you talk to that and the case for SMID caps?
Yeah. So this year in particular, the large cap companies, there is now a colloquial term for them. We call them the Magnificent Seven. Really, 7 large mega cap drove almost the entire market return for Nasdaq and also for S&P. There was a very simple reason for that, is because of AI. So if you think about the development of AI at the hardware stage, which is where we are at, we're still just putting the infrastructures in place to develop AI. It's a very large company phenomenon. For a few very simple reasons. One, the infrastructure itself is owned by a handful of very large companies. So the cloud, AI has to run on cloud, and the cloud infrastructure is really just 4 companies in the entire world. So they tend to benefit disproportionately from AI's increased need for infrastructure online. And the second one is initially to develop a very large language model such as OpenAI is incredibly expensive. It takes about $1 billion. So not a lot of companies in the world really have that kind of resources. So I think at the initial stage, it makes a lot of sense that the gains go to large companies, go to NVIDIA, and go to the cloud providers. As we go for the second phase, of AI, as a transformational force, if you think about every paradigm shift within technology, the hardware investment always go first. So you go from mainframe to PC, you go from PC to mobile, now you go from mobile to AI. The hardware go first, the software comes second, but eventually the profit pool made by software tend to be a lot higher than hardware, because eventually it's really how we use AI that really changed the world, not just the investment into AI. So I think the next phase for AI is going to be software, it's going to be application. Large language model is going to be the backbone that support a lot of these newer innovations, but you're going to have a lot more what we call this small language model, and this language model costs between $10 to $50 million to develop. All of a sudden, you open a whole new world for really everybody to really use AI as a tool, and the race become how to best use AI to train my own data on AI, and not just become, who has the checkbook to write $1 billion. So that's probably the first reason. And the second reason is, the investor attention and the analyst coverage for some of these smaller companies have really just dried up. The attention tend to go with what stocks are going up. So a lot of these smaller cap companies, what we're seeing is 2 things happening at the same time. One is their valuation has really cratered, and that is from rising bond yields. That is also from the investor attention is shifting away from the space. But the second thing is we actually see earnings not only turn, but in some ways actually accelerating. So when you put the 2 together, you get really the holy grail for growth investing, which is to get fast, sustainable earnings growth are really valuable at a very reasonable price.
And why now? Why is now a good time to launch a SMID fund?
Well, now is a really good time, and we tend to think that you gotta fish where the fishes are, and now you just have a lot of very big fish in the pond of SMID. So you have valuation continues to come down. You have AI as a potential earnings accelerator of a lot of these companies to have their earnings go back up. And then you have real cost discipline. Even with smaller companies, because of the bond yield, because of interest rate, because of inflation, I think there was a real renewed focus on cost discipline. You have the private funding for the smaller startups really dried up. And that actually for the public companies in the SMID space, you also have less competition. So really there is a lot of really favorable factors going into the earnings growth over the next couple of years, while their valuation a lot of times are at decade lows.